Good evening, everyone. Thank you for joining us today for our live webinar on investment landscape. What are the opportunities with the Nikkei index? This is Phil Gunn. I'm a senior sales manager with Philip Nova. In today's webinar, we'll be discussing the topic of investment landscape, the opportunities with the Nikkei index. Before we begin, let's do a sound check. If you can hear me, type yes into the question box. During the webinar, if you have any questions, just feel free to post the questions in the question box. And my facilitator will arrange them and I'll address the questions at the end of the session. Okay, it looks like everyone can hear me clearly, so let's begin tonight's webinar. Let me do a quick introduction of myself. I'm Phil Gunn, the speaker. I've been with Philip Nova for 15 years now, since 2008. I hold a dual license in futures and stocks, and I'm account manager to help clients trading in futures, forex, as well as shares with understanding of the product and market by providing coaching and economic information to make proper trading decisions. There are some ways to participate in the Japan stock market. You can do so via CFDs, or you can also do through the SGX Nikkei futures, which we'll be covering today. The Nikkei has recently been very volatile and has been hitting higher and higher alongside with other markets as well. Now this presents an opportunity of a trending market trade, and the Nikkei 225 futures is a perfect tool for leverage for a long-term trade, which you can consider over its counterparts, such as trading actual shares on the Japan stock market or the CFDs. In this webinar, we'll be looking at the pros and cons of using the SGX Nikkei 225 futures or other Nikkei futures contracts and have an understanding of the mechanisms of the contract. At the end, we'll also go into discussion on the fundamentals and the technical outlook of the Nikkei. As mentioned, if you have any questions throughout the webinar, feel free to post them in the question box. My facilitator will arrange them and let me know, and I'll answer them during the webinar or at the end at the appropriate time. The webinar will also be put up on YouTube after today, so feel free to revisit the video if you wish to do so. So let's get right into it. Before we start, just a quick disclaimer that materials provided here is for general information and does not constitute a recommendation or solicitation to trade. Okay, the agenda for today, for the first part, we'll look at the Nikkei index futures for SGX and understand the mechanics of trading the Nikkei 225 contract. We'll look at the contract specifications and characteristics to fully understand what we're actually trading on. Then next, we'll go into the detailed examples of some trades, possible trades that could happen when you trade on the Nikkei 225 to understand the calculation of the buying and selling. And then we delve into the reasons why we trade the Nikkei 225 futures over some of the other options that we have, and why is it in it for you to trade on the Nikkei futures contract. And the last part will be updates on the BOJ's monetary policies, as well as the political spectrum that's been quite volatile and uncertain at this point, and how it impacts the Nikkei market. So our last part will be a technical chart analysis and the outlook on Nikkei for the next year, 2025. If you have got time, we will also take a look at the platform and show you some of the features of the platform which we have added into. So without further ado, let's get started. What is the SGX Nikkei 225 index futures? So this futures is actually launched in 1986. The SGX Yen Nikkei based 225 index futures made history as the first equity index futures in Asia, and is the world's first futures contract based on the Japanese stock market. So today, the SGX Yen Nikkei 225 index future remains a dominant offshore Nikkei market during Asian hours. Index futures are actually contracts to buy or sell a financial index at a set price today and are settled in the future. In other words, it could be actually a look into the future of how the market sentiments think about the index itself. So if the future prices is higher than the current, then the market has a sentiment that the market is going to do well in the future, and vice versa. These contracts initially were meant for institutional investors, but now the market has opened up and have been open for any retail investors who are interested in investing. Besides the SGX Nikkei contracts, Nikkei futures is also available on other exchanges such as CME and Osaka Exchange. As these are listed on different exchanges, there are different contracts and the sizes and different sizes as well, and in the end have to be closed off separately. However, the regular sizes on CME for dollar and yen-based contracts are both mutually offsettable. So the Osaka Exchange contracts are specifically on their own and can only be traded during the Japanese trading hours. We'll go into more details on the contract specifications later on, but as mentioned, the, the focus today will be on the SGX Nikkei 225 for examples. So the Nikkei 225 actually reflects the state of the Japanese global economy in a highly sensitive manner, as it comprises of the constituent representatives of the major industrial sectors, such as the Toyota and the Sony. The constituents of the index are chosen from stocks actively traded in the market and include, in addition to the traditional large stocks, some fast-growing companies such as Fast Retailing, the provider of the Uniqlo brand, or the SoftBank Group, which actively invests in companies, especially in the internet industry. So, since the Tokyo market opens earliest among all major stock markets, the Nikkei 225 reacts to the global events first in the world. So, talking about the constituents of the Nikkei 225, portfolio managers use the index futures to hedge their equity positions against a loss in stocks. So having an understanding what it comprises of and the weightage just gives you an understanding how much exposure to each of the stocks you have. Although initially it was meant for institutional investors, now retail investors can also use this in its various contract sizes available, such as the regular size, the E-mini size, which is 1/5 the size of the regular size, or even the micro contract size, which is 1/10 the contract size. So it's really readily available, and the risk control exposure is much accustomed to each of the investors, and you can trade in any lot size that you want in denominations of the contracts itself. So mainly it's used to speculate the Japanese stock market now for retail investors through the index, or certain investors still use the index futures to hedge some of their positions in the stocks. Although it's not a direct hedge, but in some aspect it can form as a hedging strategy. So the Nikkei 225 index has been historically dominated by the technology sector as shown here. Over the past 15 years, the technology sector comprises mainly of the 40% of the index, surpassing of the S&P 500's technology weightage of around 30%. Semiconductor-related companies like Tokyo Electron, Advantest Corporation, and Shin-Etsu Chemical is a silicon supplier, have largely overtaken the electric machinery manufacturers such as Funk, manufacturer of factory automation equipment, and Kyocera. This shift reflects the growing importance of semiconductors in today's world, mirrored an explosive growth of semiconductor material and equipment makers in Japan, much so because the chips are required for many functions, including Bitcoins as well as AI. As chips become more and more complex, demand for more advanced production equipment will rise, and a demand that the Japanese semiconductor industry is well equipped to meet. And if you want to track this technology sector, the Japanese market can be a good index as it has about 40% weightage on the technology sector. All right, having an overall broad view of the Nikkei index, now we'll look at the actual mechanics of the Nikkei 225 futures and how it works. In general, so if you wish to invest in the Nikkei 225, you're actually investing into one lot size of the underlying. It can be a mini size, a micro lot size, or regular size. So in this example, we'll say, let's take a look at the regular size, and there's a margin required for each lot. And for the regular size, that margin is 1.43 million Japanese yen. All right, so still quite a big contract for most, but this is taken as the example. Uh, suppose you want to think that the Nikkei market will be doing well in the future, which it is currently, you will buy one Nikkei contract, Nikkei 225 regular size at the current price, roughly about 38,600 index, and the notional value for that is 19.3 mil Japanese yen, right? So with one margin of 1.43 mil, you are investing in one lot size of value of 19.3 million yen. So there's a leverage involved here. Subsequently, when the market rises as to your prediction, and you're able to sell the Nikkei 225 at 3650 index, and based on that points of the index, that notional value will now become 19.325 mil of Japanese yen. So as you can see, this is a 50 points increase in the index, and each point is equals to 2,500 yen, giving you a profit of 25,000 yen. We'll go into the details of the calculation later on, but generally you can invest in this index by simply buying the futures contract and then selling the contract again when it rises to make a profit. And the difference between the buying and the selling price minus the commission, of course, will be your profit. So I think that's very straightforward for the buying trade. And you can invest through the Nikkei futures. So as mentioned, there are various sizes available. On the SGX Nikkei, we have the standard size, the 1.43 million yen margin required for the regular lot size. If that exposure is too much for you, you can go for the mini size, which is 1/5 the size of the regular lot size. In terms of fluctuation in movements of the point index, your exposure is also 1/5 of the risk exposure. And the contract margin required is also 1/5 of the original, which gives you about 429,300 yen. Both in all gives you a leverage as you don't come up with the full value of the contract size. So you simply come up with a portion of it, and the leverage is about 14 times leverage. And the good thing about this is there's no financial cost for this leverage, and you can do so through the futures contract. The only cost that you incur is the commission cost for buying and selling the contract and the exchange fees, which is very minimal. Currently, there's a promotion going on, and I'll mention the rates later on. Moving on, this contract can allow you to trade in bidirectional markets. Meaning to say, if you think that the market is going down, you can actually sell the contract first. And if the index does indeed go lower after that, you can buy back the contract. And in typical stocks investing, you can't do that. You can only do the short selling through different products such as the CFDs and the futures market. And the futures market allows short selling. So you can actually sell first and buy back at a lower index price later on. So because it's a leveraged product, it will be marked to market based on the settlement price every day. And if there's insufficient funds, there will be a margin call, and you will need to do a top up. So this is the caveat that you have to take note of the market changes and have enough sufficient funds to tie you on the down market. Or your strategy may be a more short-term strategy, and you can actually close off the position once before you go to bed or leave the computer. All right, we'll go more details on that calculation later on the margin call. So on top of that, because Nikkei 225 futures are yen-based and some Nikkei futures are dollar-based, the US dollar-based, you can choose which currency-based future contracts you wish to trade in. And for the yen-based, of course, you'll be exposed to the Japanese yen exchange rate, and both unrealized and realized profit and loss and the initial margin is subject to interest charges, which can be totally avoided by just converting the funds into Japanese yen. However, because of depreciating Japanese yen at the moment, which may change later on depending on the monetary policies, well, that could be something to take note of when you have actually some currency in Japanese yen. Moving on, we'll take a look at what happens when the contract approaches expiry date. So for all futures contracts, there's a expiry date. So what happens when this contract expires? You need to close off the position, or the first choice is to roll over position. If you wish to maintain the direction of the market and continue to hold. So this is done by executing a closure of the current position month and open a new position in the forward month, right? If you fail to do so, because it is cash settled, the exchange will do the closure for you, but it will not do the rollover. So the rollover has to be done by yourself by closing off and opening on the new month. Of course, you can also close your position yourself before the expiry date and realize the profit or loss. In both scenarios, because the position is closed before opening a new one or not, the investor will actually realize their profit and loss upon expiry. As mentioned, if there's no action taken, the positions will be closed by the exchange based on the settlement price, which is transparent to all and announced on their website. The reminder will be sent by Philip Nova if you have an open position 1 week prior to the expiry date. But as mentioned, if you have failed to do so, the exchange will still close it for you and realize the losses. But I'll also remind you if you are actually under my service about the expiration of your contract. So in summary, this is the page for the Nikkei 225 contract specifications. The regular contract size is pretty big at 500 yen times the index. So if the index is at 38,600, you multiply it by 500 yen, that gives you the overall value of the contract they're dealing with. So the minimum fluctuations is 5 index points. So each tick, it moves by 5 points. And the 5 points indicates a movement of $2,500 in yen. Right, and it is a quarterly contract months and expires on the business day preceding the second Friday of the contract month. So for example, it will trade in the months of March, June, September, December. Currently we're in November and we are trading. The active month is December right now, and the next forward month is March. So if coming the second Friday of December, probably on the 12th or something, on a Thursday, the contract expires and the exchange will close the positions if you fail to do so. So take note of the trading hours over here, and mostly for the SGS contracts, it is 24 hours from 0700 hours to 0600 hours from Mondays to Saturdays. Weekends it is closed, so because exchanges are closed. Okay, so now we are looking at some of the trades that we can do on the Nikkei 225 and how do you calculate the profit and loss. So in the first example, we'll take a profitable trade, and this contract size we're looking at is the regular size again. The initial margin required is 1.43 million yen, assuming that we have the funds Japanese yen as well in the account. Well, the smallest ticket as mentioned is 5 points, and every 5 points is a $2,500 yen movement. So currently the market price 41240 bid versus 41245 ask price. To buy, you will buy at the ask price at market, buy one lot of Nikkei at 41245. Okay, and subsequently, maybe later at the end of the day or later on within 10 minutes or the next 2 days, the Nikkei went up as expected to 41345. As you can see, the difference in the buying and selling index price is 100 points different. And because each 5 points equals to 2,500 yen, 100 points movement is 100 divided by 5 times 2,500 yen, which gives you 50,000 yen in profit. So by closing the position, you have realized the profit of 50,000 yen, and the account now stands at 1.43 mil plus 15k, which is 1.48 mil yen in account. Of course, this trade you have to consider the costs incurred, and the cost incurred is the transaction cost for the commission plus some exchange fees. So it's roughly about 2.5 US dollars for a round trip promotional rate. And this is actually ongoing and will be extended. More details on this promotional rate later on. So simply the cost is actually very little for the transaction, and mainly most of it, the bulk of it is just on the actual settlement of the trades. So I believe this positive trade example is pretty straightforward. I'll move on to the next one. And in this example, we'll take a look at a loss with the similar inputs as per previous ones. And the Contract lot size, we're looking at one lot size with a margin of 1.43 million yen. And to remind again, one small stick is 5 points is 2,500 yen. And we have this time, instead of 1.43 million yen, we have 1.5 million yen in the account, which means we have more than have enough funds to actually invest in one lot, because one lot only requires 1.43 million yen. And we have excess of 70,000 yen. Still, we can just do only one lot. So we buy the same lot at 41245. However, at the end of the market day, maybe at 6 o'clock, settlement price came out to be 41145. It went down by 100 points instead, and we have not closed out the position yet. So based on the settlement price, we'll mark the market of the position that you have, and this is a loss of 50,000 yen, which is unrealized. Things can still change on the following day when the market opens, and it may come back in your favor again. However, in your account, take note that your 1.5 million funds of yen in the account minus off 50,000 gives you a balance of 1.45 million. But you're still in the safe zone because of the excess funds you have. There's no margin call because your margin 1.45 million is still greater than the margin required of 1.43 million yen. So having excess funds in the account prevents you from topping up every now and then, and it's a good habit to have some excess funds in the account when trading on futures contracts. Well, you know what's coming up next is the margin call. If the funds are not enough to cover the movement in the market, this is what will happen. And using the same example of entry of price at 41245, we also have 1.5 million yen. However, this time at the end of the market, probably on the second day, all right, the settlement price comes down even further to 41045, and this is a drop of 200 points against your direction because you bought the Nikkei index instead of selling it. So the loss is actually 100,000 yen unrealized loss. So to take that off from the account gives you a balance of 1.4 million yen, which falls below the margin requirement of 1.43 million yen. And there's a margin call of 30,000 yen. Of course, you can top up in Sing dollars and convert it to Japanese yen. Yeah. So having excess funds give you the convenience of not doing the topping up, but you need to monitor the amount of excess funds you have, and it falls into negative region below the margin level. A margin top up is required within 2 days of the call, and if you do not do that, positions will be liquidated at the end of the market closure on the day 2 of the margin call. So this is a scenario of the margin call. I hope you're following so far. Okay, so having covered that, let's look into the reasons why we trade the Nikkei 225 futures. Right. First, for diversification, the Nikkei 225 index offers investors a high degree of diversification as it draws from multiple different sectors. There's relatively lower volatility as advances in the winning sectors can help make up losses in others. In addition, the Nikkei is also a good representation of the overall Japanese economy. So having a broad diversification instead of buying single shares is good for is a good feature of the index futures. The next is the bidirectional feature of the index futures. It allows you to trade both the upside and the downside of the market. It means that you don't have to wait for the index to rise to make a profit. If the index might make a downturn, for example, when there was a tsunami, the Japanese yen, the Japanese index actually fell down within 3 days quite dramatically. You can make use of the opportunity to short the index, and having an account to do that gives you the convenience of making a quick profit for the trade. So there are opportunities in the market we can hop onto when the market faces a black swan event. So a short position in those events will give you a profit when the index falls in a bidirectional trade. The lower barrier to entry, the Nikkei 225 has a comparatively lower barrier to entry. You can start the Nikkei futures index with the micro lot sizes, uh, which is 1/10 the size of the regular yen, roughly about $1,320. Yeah. So comparing to buying shares of the index fund, this index futures actually helps to track the Nikkei very well as well. And the cost for it is very, very low compared to buying the stocks or the index funds itself. Next, leverage. Of course, the Nikkei 225 mentioned just now, the leverage was about 14 times. It's about 14 times. So this will actually increase your gains if it's in your favor. However, it also is a double-edged sword. If it's against, the direction is against you, your losses will also be magnified. Excuse me. So these are the reasons because of the features of Nikkei 225 futures, why it's such a useful product to use when trading on the index. Next, one of the other options, you may have heard of CFDs and wondering what's the difference between futures and CFDs. Okay, uh, so the first difference is where they are traded on. Okay, you understand that futures is traded on exchanges. This is the most transparent, fair place that you can think of because exchanges guarantee the trades and everything that is traded on an exchange is transparent. All the trades are documented, and the counterparty is a fair party, can be a retail investor or an institution. So these exchanges are highly regulated to ensure the quality of the trades and the smooth transitioning of assets and offers the highest liquidity possible because everybody trades on exchanges for a just playing field. So this greatly reduces your counterparty risk. You have no worries about that, almost zero counterparty risk, I would say, compared to trading over the counter method of trading over the counter. When stocks get delisted, they get traded over the counter. This means that any transaction is a private transaction between you and the company. So the liquidity provider for CFDs is a counterparty that is provided by a brokerage house or by another liquidity provider, um, a trading partner that provides you the price feed, and they can actually choose the amount of liquidity to inject in the market. So comparatively-wise, you will want to prefer a one that provides better liquidity, which is the futures trade that's traded on the exchanges. Next, asset classes. There's a variety of today's example, we're looking at index futures. There are other options such as currencies, stock indices, commodities. They are all available as underlying products under the futures. But as today's focus will be on index futures, we move on to the contract sizes. Well, in this aspect, futures used to be at a disadvantage, but currently more and more sizes come out in different micro, mini sizes. So in this aspect, there's actually no difference right now, even though CFD used to be more flexible in contract sizes and can trade as small as uh, one, one, one unit. But currently, futures go in micro lot sizes, so I would say they are actually on par in this aspect. Next is expiry. All right, coming with expiry, of course, as mentioned, futures they expire every 3 months, and you need to manually roll over your position to a new one if you want to maintain your position. CFDs do not CFDs do expire, but you can also roll over your position automatically, right? But to take note, when you roll over, there's financing costs over a long period of time of maintaining the position for CFDs. As an interest premium is charged on long positions held overnight on CFDs. But for futures, you can avoid all financing costs uh, on open positions. So you don't have to worry about any financing costs. The only cost that incurs is actually the transaction cost of the commission charges and exchange fees, which is very minimal, less than $1 for one side of the trade, and for the promotional price. And of course, the interest charges on the currency deficit that you may incur in Japanese yen or US dollars. So as long as you convert the currencies properly, you can also avoid interest charges. Right, next, leverage. So for CFDs, typical leverage is about 10% or 20%. Well, this is about the same as for futures contract. The leverage is about 14% currently. So in terms of leverage, both exposures are as competitive as one another. So based on this, I would say futures is actually a much better choice in terms of costs, in liquidity, and many aspects as well. So what are the disadvantages for trading on the index futures if it's so good? So let's just go a quick run through the advantages of trading the Nikkei index. So first up, the liquidity is traded on exchanges, which allows you to enter and exit positions with ease, right? Liquidity is highly sought after because that determines the spread of the market. And if you're in a high tight spread, you can actually break even more quickly. So next, the transparency of the prices is all listed on the exchange. There won't be any foul play, and you don't have to worry about not finding a counterparty to match your trades. As long as the exchange is open, you can actually place your trades. And now the exchange is almost 24 hours from 700 hours, 600 as electronic trading is available, right? So it's a bi-directional market. You can trade in both upside and downside during a bull or bear market. So there's low or almost zero counterparty risk as the trades are guaranteed by the exchange and they are held accountable for all parties. Low cost of trading for Nikkei futures as compared to buying individual stock components. We'll come to the trading cost later on at the end of the webinar. And you can see that now the trading cost is very low for each individual trades. Also, what are the disadvantages for trading on the Nikkei index futures? First of all, there's expiry, so there's a manual process where you have to close off your positions and open a new one if you want to maintain the position. And in doing so, you realize profit and loss. However, you can continue to buy into a new position, and if the market comes back later on, this loss will come back again. So it's as good as maintaining the position. Of course, when you roll over, there'll be a small spread difference between the current month and the future month, and that can be in your favor or against your favor. So that's the small difference in the but if you close the contract closer to the end of the month nearer to the expiry date, the index of the futures will be very close to the next month. In terms of lot sizes, yes, that's you can do in denomination of various sizes. I wouldn't say this is a very big disadvantage because right now there are micro lot sizes, but the thing about this is micro lot sizes cannot knock off your regular sizes, so you have to manage them as individual contracts. And so in terms of lot sizes management, it still has to be managed on your part on the amount of number of trades that you wish to expose to. And currency risk, because Nikkei futures are either denominated in yen currency, or if you prefer to choose a dollar-based currency, you can do so. You'll be exposed to the currency risk. Depends on situation. Currently, the yen is depreciating, but if the yen starts to appreciate again, that might be in your favor, and you probably will want to consider a yen-based futures contracts. But for now, the dollar is appreciating, so maybe trading on the dollar base is better off for you. But in the longer term, let's say if the dollar in some point of time tries again depreciates, you will have to consider yen-based instead. So it really depends on the outlook on the currency, and in short, there's actually a currency risk on the fluctuations of the exchange rate. Before we move on, the next part is the actually analysis of the trades of the Nikkei market. And first, we want to touch on the political instability in the Japan itself. So investors were concerned about the Prime Minister Ishiba policies. Well, after he won the leadership of the election as the Prime Minister on the September 27th, he actually made some comments and caused the Japanese Nikkei index to plunge 1,900 points on the following Monday after his win. And this is a phenomenon known as the Ishiba shock. But soon, his remark was about the opposition to the interest rate hikes of the Bank of Japan, and has taken the financial market by surprise, as he has always been viewed as a supporter of the rate hikes. So that caused a crash in the market because generally speaking, dollar yen actually is directly correlated to the direction of the Nikkei index also. So if the dollar yen drops or the yen appreciate due to interest rate hike, right? So the market will also drop, right? And that's what has happened. And when he when he is actually makes those comments of the opposition to the interest rate hikes. I mean, supportive of the interest rate hikes. Pardon me. So after the meeting, Ishiba told the reporters he does not believe the country is currently in an environment warranting an additional rate hike after seeing what it cost. So this led to a rebound of the fall and the weakening of the yen once more. So the dollar and yen jumped up, and so did the stock market. The following day, he made that correction in his speech. So as you can see, although the Prime Minister does not have a say in the interest rate because these decisions are made primarily by the BOJ itself, which is a separate entity, just like the U.S. federal Fed department, it cannot be intervened by the Prime Minister. So it kind of actually caused an unnecessary movement in the market. But the correction was made and yen was made to weaken, and many people came to believe that the BOJ cannot increase their interest rates due to the political pressure. So leading to consumers suffering from a further inflation as a result. In comparison to his 27 September victory, Prime Minister Ishiba did not do so well in the snap election after that during the weekend. In the election he of the lower house that was held on Sunday, 27 October, LDP and its coalition partner Komeito suffered a crushing defeat and lost the parliamentary majority. So as mandated by the constitution, the parties have to have 30 days to negotiate and form a coalition that can govern. But the fate of the minister remains a big question mark. But right now he has actually continued to be elected as the prime minister. So, but he has to form a government with the political parties and a coalition group, and so they are pretty supportive of the interest rate hike. So he might have to draw up some economic measures for extra budget quickly, and this can be significant, which could um, change their monetary policy. So we have to see what is coming up for the Nikkei market if the interest rates are coming soon. So that's on the Japanese political front, which is pretty unstable, but really depends on how it unfolds on their when majority is mainly based on the monetary policies, which will come to now. And as you know, interest rates are actually formed by the BOJ's monetary policy meetings (MPM), and based on the last meeting, the rate was kept at 0.25%, widely expected. And followed by those political uncertainty events. However, the BOJ chief said that Ueda suggested that the BOJ is gradually getting ready for further rate hikes also. He is less concerned about the US economy, citing that the US economy is robust, employment factors and is all strong. He commented the degree of risk from overseas economies is shrinking little by little, and this does not mean necessarily that the BOJ will raise the interest rates straight away, but it reflects it's trying to prevent further depreciation of the yen, um, basically trying to keep the currency stable. I think that's the real reason why he made those comments, because the fluctuation in currency is not good for business. However, the last wholesale inflation figures rose also to 3.4% versus 3%. So rising inflationary risks driven by domestic demand and higher wages were last cited by Ueda as one of the key factors that BOJ decides whether to raise interest rates or not back in July. So as these factors are rising, the chances of raising interest rate rises. And after the Trump's presidential election win, we see the Nikkei had a retracement on the news, right? So the reason for that is because of a 20% tariffs promised by Trump's incoming administration on all imports into the US, 60% on China imports. But we'll see how it unfolds, whether it carries forward those claims. And you can see that if that happens, market might go for deeper correction when he takes office and implement those tariffs. But as of now, the effect of a strong dollar after the US election is quite prominent, as we can see that the US dollar strength came from prominent corporate tax cut on the companies, giving more reason for the company's earnings to increase in the future. So it gave some upward momentum for the dollar yen, and the yields of the bonds for the US Treasury has also increased. So in the short term, we are seeing a strength in dollar, which gives a good impetus for the dollar yen upwards, which in fact positively affects the Nikkei index going upwards. So in the short term, we see a Nikkei index that's going up. A weaker yen also brings in more foreign income because Japanese is an export dependent country, and weaker yen gives more value for foreign income that's earned. So having seen the effects of the tariffs on, we have not seen the effects of the tariffs of the inflation in future, but right now the dollar strength is giving much hope that the index is indeed heading higher and higher, but risk of a downside due to tariffs on inflation might prove otherwise later on in 2025. Those are some of the intakes I have, my inputs I have for the fundamental analysis for Nikkei 225 index. So um, with that, let's look at the Nikkei 225 daily chart, the technical aspect part of it. By analyzing on the prices, let's see what the market is doing. As you can see, the market has been on an uptrend ever since, and due to Ueda's comments, it plunged. And then after that, it rebound after it corrected his comments. So overall, the dollar yen has been the Nikkei index, this is the Nikkei index, is very volatile, swings. And after the win of the election, there's some retracement downwards, but overall it is well supported on a trend line drawn by the blue line over here, and we have not yet is testing the support trend line and has not broken yet. But I was think that the scenario right now will be a testing phase of the resistance level over here. So let's take the boundary over here of this between these two lines. This is trading in a range of a 37,465 to 40,123 range, and I expect it continue to do so. And I'll watch very closely this two support and resistance levels. That's very important. First indication, a breach of the trend line will have to be confirmed by a retest of the support line. If the retest of the support line fails, right, we can see a deepening of correction to this level over here and even to this support level over here indicated by the blue line. These support levels, let's see, can be, yeah, is 32,302 over here. So that is if it breaks the support level in between this range over here. However, if it continues to retest the resistance levels and hit higher in the short term, we can see it push again higher towards the 40,800 and or even this high over here. That's the probable continuation of the trend right now if the support trend line is not broken. So those are the two possible scenarios. And with that, we have a bit of time, and I would like to show you some of the features of the platform that can use to trade the Nikkei futures. Right. So this is the Nova platform. We have actually had the software platform program version, and you can install this into your desktop once you open the account. Account opening is free, and more details on it later on. And you can gain access to this live price feed and take a look at them on the platform and get used to it. So as you can see, the watch list is over here, and the monitoring positions are over here, right? And to add the contracts, you can simply just click on the watch list and add the product types. Just a quick feature, we have other categories such as promotional contracts, and if there's any ongoing events such as the US section or the rise of China, suggested products that you can trade on ETFs or futures that's popular among the traders are also listed here by our analysts, right? So this is one of the options available once you have the platform. And to add a contract, back to adding the contracts, you can click on the futures contract or stocks, and this is or forex or ETF. So this is a one-stop platform of all the products all in one place, and you can do so by clicking on the futures contracts to add. For example, if you are looking for the Nikkei contract, you can go to either SGX or the CME and look for the Nikkei. Right, so For example, the micro Nikkei dollar contract, if you want to do that, you can do so. And then select the contract month. We have already selected the December contract month already, so it's shown by this means that it's in the watch list. So just to show you how it works when you look at charts are also available on the Nikkei contract over here. And you can do so by clicking on right click on the contract itself and click on chart. Right, so let's magnify that to a big size. So this is actually incorporated. We have incorporated the trading view charts into our system, and the indicators are also available from trading view. So you can see that with live account, you have access to the live prices as well as the charts itself for your per user. And the similar functions such as indicators, or if you wish to add any indicate trend lines, you can also do so yourself. Right, so I'll leave that up to you to explore if you have a trading account. Yeah, and something to take note, the placement of orders as a quick one. You can just place the order, and the trade menu is very straightforward. You have the buying and selling price. This is the market levels. As you can see, it's a very tight spread of one tick. One tick is 5 points, right? And then you can click on the order types, right? And all the information is really available. This is a regular size one. This is a mini size one. You can see the margin required is this amount, right? If I want to go for a micro lot size, I can actually choose the CME micro lot size and place order. This is the dollar-based one, and you can see the margin required is only 1,320 US dollars. That's the smallest contract size for Nikkei. And the last trading day is the 12th of December, which is the day before the second Friday. This is a Thursday, and if you fail to close, the position will be liquidated. So all the information is available when you're placing the order, and of course we have limit orders, market orders, as well as stop loss orders to protect. So assuming you have a position already and you want to put a stop loss order, you can also do that, but in the opposite direction of the sell, assuming you have a buy position initially. And the selling price, well, of course, for the stop loss, triggered by the stop price, you can indicate a price lower and indicating a range where you wish to take the stop loss. For example, if the market dropped to 37,000 as an example, to 30,500, okay, and then you wish to take the stop loss, you have to indicate a range of 37,500 to 450. So any price in between, they will work in the best available price from 37,500 downwards until your order, stop loss order is done. Due to liquidity, most often not, it will be done at the stop price or close to the stop price. So it really depends on market conditions. As this is an exchange traded product, so all the orders are transparent and match in a very fair first come first serve basis when you're inputting the orders. So that's for the placement of trades. Once you place a trade, it will end up as a working order over here. As you can see, the status is either working or partial. Once completed, it will be the status will change to fail, and this is where you monitor your open positions, and you can see what positions you have, and your account balance is also shown over here. So just a quick one on the trade menu. You can also do other things such as currency conversion. As mentioned, it's in Japanese yen, and if you want to convert your funds in Japanese yen, you can do so yourself online. And all funds deposited. You can also withdraw the funds from here straight from this platform, trading platform. And all this is available on the Nova 2.0 app as well on the mobile phone. You can also view statements that for previous day trades or up to 8 weeks. So all downloadable from this platform. They are also sent to you via email every day if you make a trade on the previous day. So for fund deposit, it's very easy. Also can initiate a QR code by indicating the amount you want, and the QR code will be generated. For example, $100, and you can just scan from your banking app and make the transfer, and funds will be deposited within 5 minutes. So having an account ready for this, you can just have an account ready for the price access, and when you want to trade, you can just fund it and start trading within 5 to 10 minutes. So there's also a log for all the fund deposit history. So that was a quick run through of the platform. Okay, let's move on back to the slides. So, as mentioned of the platform, Philip Nova offers a one-stop platform. You can trade across multiple assets on the platform, including stocks, futures, forex. So this is also available on the Nova trading app on your smartphone, and as well as the PC desktop device, which I have just shown you. On top of that, the chart is powered by TradingView, and you gain access to over 100 technical indicators. You can also access the market depth provided and view liquidity, which I did show just now, and trades for a particular price in the market easily. This platform is absolutely free. There's no maintenance fees, and you can simply open this free account and monitor your trades wherever you are on the go whenever you want. So I have actually shown you some of the added features just now, and from this, the watch list, when you add the products, you can also see categories of promotions and what are the popular trading products. Right, so you can actually sign up for the account by scanning this QR code over here. It only take a few minutes using your SingPass account. There's no minimum deposit required, and you can get access to the live prices right away, as well as the trading charts powered by TradingView. If you sign up using this QR code below, you can also sign up for the free one-to-one coaching session, which will be a course on technical analysis and demonstrated our Philip Nova platform. I'm a dual license holder specializing in futures, forex, and stocks. You also have a sitting buddy like to service your account if you have any questions about your account, trading matters, or positions, or the market. I'll be servicing AE of your account with no additional cost. And you also receive daily updates on the economic data releases and technical advice via WhatsApp, which I send out every Monday to update you of the market events that's ongoing for the week. So besides that, we also have our in-house analysts that will email the technical reports on suggested levels for your reference. This will be entry and exit levels for your considerations to help you to think up of trades that is possible. And this is sent via email as daily trading highlights, showing directional views from the global research desk of our Trading Central. This can be the starting point for your own research to identify opportunities that make sense for you. Markets include the Dow Jones, Nasdaq, S&P 500, the Nikkei, of course, even Singapore, FTSE China, and the Singapore Index. So a wide range of indices underlying. There's also commodities such as the crude oil, the gold, the energy, and the metal sector. So all this is provided you free of charge once you sign up a live trading account. And we provide you for the fundamentals as well, as we cover the commentary reports to give you updates on economic views and news that's happening around the world. This will keep you be updated on the latest news that have a potential impact on the markets. This saves you the work of searching for this news yourself on the internet. And as your servicing AE, I will also be available for you through communication via WhatsApp or email if you require any updates on the position that you have or related news on the positions that you have. So we provide both the fundamental as well as the technical aspect of the trading information to you, and you can have a platform ready to enter the market whenever you are ready. So besides this analyst report, you can also reach out to me if you have any questions about technical views on the trades also. So currently there's two promotions going on for the Nikkei index futures. The first one is to fly to Japan Nikkei promotion, where if you open an account and make any 5 trades in any combination of micro lot size or regular sizes, you earn a chance to win in a lucky draw that will be conducted. We have actually been ongoing for 6 months, and November is the last month. We still have some time left for the last draw for a pair of tickets to Japan. So simply just open an account and trade any 5 lots to participate for 1 lucky draw chance. And the second ongoing promotion is the actual promotional rates on trading Nikkei futures. So as that various exchanges, most of them are the SGX Nikkei, CM Nikkei are all at 50 cents per lot. If you're trying to trade the micro futures on the Japan Osaka Nikkei index, that will be 10 cents per lot. So as you can see, the commission charges are very extremely low, and this promotion will be extended. The good news is to March of 2025, and this will be a good chance for you to participate in this promotion and try out the Nikkei market since it's actually heading, being quite volatile, and try your hands on the micro lot size, which is a pretty decent exposure to the market. Right. So in summary, uh, we have the Fly to Japan promotion, and you win a pair of tickets to Japan if you place any flight trades for one lucky draw chance. And this promotion ends end of November this month. The second promotion is to the promotional rates for the Nikkei futures. So you can participate right now with the both promotion rates by simply scanning the QR code that will be shown later. So simply sign up for the free account opening now by scanning this QR code. Take this opportunity of the two promotions and sign up for free live account. So with the live account, you get access to the trading platform with the trading charts features from TradingView, and you can fund the account anytime you want. There's no initial deposit required, but once you fund, the funds will be credited within 5 minutes. So with this low promotional rates, this is actually a good chance to start trying out trading on the Nikkei contracts, or you can simply just try out the platform first, and you can also start with micro contracts also, so the exposure is lower. There are absolutely no platform fees or maintenance fees. So simply just use this QR code and I'll be assisting you on your account matters, and you have a dedicated servicing AE on your trading account. So I look forward to onboarding you on this trading journey. So just a disclaimer, this promotion is until March 2025, and this does not include exchange fees. If we add exchange fees to that's charged by the exchanges, not by us, Philip Nova, that would be about 125 per lot per site. So it's still very low. Yeah. So a round trip is still less than $2.50, uh, which is a very attractive promotional rate. Right. So let's see if we have any questions. Okay, just one question. So besides the SGX Nikkei so what's the difference trading on the three different exchanges, the Osaka exchange, the CME, and the SGX? So besides on the SGX Nikkei contracts, Nikkei futures is also available on the two exchanges like you have seen, the CME as well as the Osaka exchange. So what are the difference? As they are listed on different exchanges, they are actually different contracts of different specifications and sizes, so they need to be closed off separately. So, but one thing to note is that the futures contracts for CME and SGX, the regular and mini sizes, are mutually offsettable. What do you mean by mutually offsettable? Is that when you open a contract on CME and close off using SGX, you can do so. They will offset the contracts for you, but this is only for the regular and mini sizes. So the Japanese exchange, Osaka exchange, is totally on their own and cannot more side match the contracts with CME or with SGX. So one of the big differences is the trading hours. The SGX and CME, their trading hours is from Monday 7 a.m. to Saturdays 6 a.m. Singapore time. Almost non-stop trading with a 1 hour break in between from 6 a.m. to 7 a.m. Singapore time. So Saturdays and Sundays the exchanges are closed and no trading is available. And this is the timing for non-daylight saving hours, and this will change when there's daylight savings hours. So for the Japanese Osaka market, the trading exchange hours are a bit different. The first session is 7:45 a.m. to 2:45 p.m. Then they have a break in between, and it starts again at 4 p.m. Singapore time and goes all the way to 5 a.m. the next day. So a couple of breaks in between. So in terms of time, trading hours, SGX CME is more tight on the available trading hours for the contract. So Micro lot size contract sizes are only available on the CME and the Japanese Osaka Exchange. And for promotion, the promotion runs for all the like Nikkei contracts or the three exchanges. So it really depends on which one you prefer. Yeah, whether it's a dollar base or the yen base or which exchange that offers more trading hours exposure. Okay, so thank you for joining us. If you require a demo Nova account to try out, we also have no demo account available. But take note that this will only be SGX contracts, and you cannot place any trades. Well, you can try out the trade menu, but there will not be funds that's available for trading. Just the demo account is a platform for you to try out to see the layout of the platform. But or you may just simply open an account by scanning the QR code for live account as the account opening is free and get access to everything, the trading charts and all the, the market access compared to the demo account, right? So just simply sign it, use this QR code if you are interested, and I'll be just following up with you shortly. So that's all the time we have for today. This is my contact. Feel free to drop me a message or email if you have any questions. Thank you so much for being such a wonderful audience for today's webinar. Subsequently, a link to this recording will be also made available in our follow-up email tomorrow. If you have any questions on the webinar or just would like to get started or have any questions, simply reply our email and we'll get in touch with you. So this is Phil Gunn signing off. Thank you very much and have a good evening ahead.